Hi guys, welcome back to this channel, and this video is going to be on daily buyers. Now before I start this video, I would like to show you something that happened today on GBP USD, because we have seen that price has given us an indication here and price has been selling. Now before I continue, let me show you this. I had this since on Monday. This is what I had, and currently I am trading the GBP USD. I had this since on Monday. This is a screenshot of my analysis, and if you have followed the top-down analysis I shared, you will see that I presented this that day with this markup, and price entered into the level we marked and is currently selling. But the focus of this video is for you to master daily buyers. You have to master daily buyers before talking about entry, because you have to know the direction of the market. So let me take this thing out so that we can continue. So here is GBP USD, but I don't want us to discuss this now. I want us to look at the dollar index. What is the dollar index doing? And if you have not watched the top-down analysis, you should kindly watch the top-down analysis for us to be on the same page. So here, the reason why it is said daily bias is because this is what you want to see, or the direction you want to see per day. So whenever you come to the market every day, you need to check the daily time frame. What is the daily time frame doing? And that is where the direction is, because you'll be trading from one candle, and which is the daily, and everything you'll be doing will be within that one candle. So you have to make sure that you understand where price is and where price will be heading to in terms of the daily time frame. So here on the dollar, I give us this. I will not spend time discussing or explaining what is here, but what I said is that we've seen that there is a rejection candle here on the weekly time frame on DXY. We are on DXY, and I said that we've seen a rejection from this level, price rejected from this level, and we see price has swept liquidity below this low. So if you're to use external to internal range liquidity, we've seen external range liquidity taken, and you're expecting what price to go into internal range liquidity in form of fair value gap. And we have seen that price has entered into this, but what is giving us this confirmation is this rejection here, and since price has shown us his direction by giving us this, this rejection candle, it's trying to tell us that yes, price may likely come into the previous range and reprice the previous range. So currently we see price is going bullish, but we're not going to be bullish forever, because we have so many things here. We have fair value gap, and we also have this change in the state of delivery here. This 3 consecutive candle is a change in the state of delivery. So you can mark it at the first candle open will be the change in the state of delivery. So you can put your markup here. So I don't have it safe, so let's write change in the state of delivery. So here is it. So we have it. So now we want to see price coming to this open or closer to the open, because price is repricing. And if we put our Fibonacci here from this range high to this range low, we'll see that price is already at discount prices, but we want to see deep discount prices. So if we go to the daily time frame, we said we want to see price going bullish. So here on the daily time frame is simple. You have to look at swing formation. And if we're going to look at this information, we have the swing one. I'm going to be marking it. So here we have this candle. This is swing one. This candle is swing one. Sorry, candle one. This is candle two. And this is candle three. So we have a swing formation. Now this has caused or has created the swing formation. But now, because it's a three candle pattern, but you have to understand that this bearish candle is a very strong bearish candle, and price has not respected the low of this candle. So that means this candle should have closed inside the range of this candle, but we see a strong candle. Now, what you need to do is to wait for price to close above the candle for you to, have more confirmation of, buying trades. And however, another way to do it is to look at what happened previously. Let's say, for example, this candle is today. This candle is today. We are currently trading at this candle. So what we need to do is to look at previous candle. How did the previous candle behave against its previous candle? For example, here, this is the previous candle of this candle. So how did this previous candle behave against its previous candle? If you look at this, is the previous candle before this candle, and it closes above it. So apart from price closing above it, you have to look at the nature of the candle. So the nature of the candle here is very, very strong candle. We see there is no wick, all body. That means that the institution are heavily bullish. So what we need to do is to mark the candle. Now, because this candle did not create a rejection on the daily by closing within the range, we see price closing above the previous candle. And what we need to do is to mark the equilibrium of the candle, because we want to be buying either at the center, which is the 50%, or the equilibrium of the candle range, or just below it, or the upper part of this candle. If you look at it, the next day candle price what expand bullish after coming into this upper part of the daily candle. But how will you determine that price will hold at the upper part, or how will you determine price is going to hold at the upper part of the previous candle range? Now this is what brought us to what? Going to the 4 hours time frame. If you go to the 4 hours time frame, you have to identify a fair value gap. And if you look at it, the upper part here, the fair value gap is what? Is at this level. You see it? It is at this level. And we said that price did not enter into the fair value gap that day. That's what I said. And we see price going bullish. Now, this is because you might see SMT or price going into the fair value gap on Euro USD and GBP USD, which is called SMT divergence, because we see this is failing to enter into the fair value gap. So the next day we see price going bullish. So let's go back to daily again. So that means this candle has been used. And for example, if this is our previous candle, all we need to do is to take our, because it closes above the previous candle. So let me shift this. If you look at this, price close above the previous candle. Do you see this is the previous high of the candle? And we see price close above it. So all we need to do is to take the 50% of the previous candle and still go back to the 1 hour time frame, the 4 hours time frame, and identify a fair value gap. And now if you look at, this is the low and this is the high, and we have a fair value gap which is at this level. So do you see? So, and we're expecting price to hold at this level. So yesterday, if you go back to the daily, yesterday price came into the fair value gap and reject from there, went to the top and see come back. That means price consolidate. Yesterday there was a price consolidation because price was within this range. Which range? The range of what? The range, candle range of low, this low, and the candle range high. We see that price remain inside the range. That is what we call inside bar, and price was consolidating. So today, since price has not finished utilizing this fair value gap, I expected that price should hold at this fair value gap. And if you go back to the 4 hours time frame, you will see that price really hold for bullish prices. So what do we see? We see more bullish prices. So today we see price going bullish, and up to now we are yet to take out the liquidity above the previous day high, but that of the high of yesterday, we have taken it out, which is here. We want to see price taking out this high because we have more bullishness, because this is our change in the state of delivery. So this is how you can easily determine bias. But now, how do you know that price is going to sell at this level? It's simple. So we need a market structure shift here. So let's go to the 1 hour time frame to identify a market structure shift. So here we see price came here, and we have lower low, lower high, failure swing, and we see this price has closed what? Above it, right? So we see this strong buy with a fair value gap, and that is a market structure shift with a fair value gap. Now I know that we are going to target this high, and price did. Now currently we see that price might easily respect this fair value gap that have order block here for more what? For more bullish prices. So if dollar is going to go bullish, what are we expecting on the foreign currencies? We're expecting what? We're expecting bearishness on the foreign currency. So if you go to the GBP USD chart, remember I kept this on since last week. I kept this because here we have this high. Let me show you the concept of breaker block. We have this high and then this low. We see a sweep of liquidity above this high. That was a sweep of liquidity. Then we see a market structure shift. So this tells us that we have a what? We have a breaker block. And where is the breaker block? This is the breaker block. Do you see it? This is the breaker block. And you see price entered into the bearish breaker block and continues selling. Now, why do we say that this is a breaker block? Is because if you look at it here, this breaker block is active because it hasn't been mitigated. The open of the breaker block, that is this candle of the bearish breaker block, has not been mitigated. There is no candle that touches this. So as soon as I see all these things, this movement, this bearish movement, I did not chase this price because I know that if dollar is going to go bullish, definitely we are going to go bearish again, and I'm expecting a retracement into the bearish breaker. So here we see that we have a bearish breaker block here at this level, and then we see a market structure shift here. After the market structure shift, we have our inducement, and then the inducement did not mitigate the break open of the breaker block. So price came back, took out the inducement here, and then entered into the breaker block. Now look at this. There is a small gap between the breaker block and the open of the breaker block and also the price. But here is one of the things I want you to understand. Whenever you have a level, don't just wait for price to hit the level exactly, especially we want to see the pip should be exactly. Sometimes price might leave a little pips. Remember, this trading view is not real price, real time price, because it's not paid. So it's lagging, and sometimes you can see your broker will take it to the open of the breaker block just to sweep liquidity above the highs. So here, as soon as I see this, I did not jump. Remember, I have my area of interest here, but I did not jump into selling. What I did was I waited for more confirmation. So if you go to the 15 minutes time frame, you will see that as soon as price entered here, we have a break of market structure here. So we have market structure shift. So there is a market structure shift. And then this market structure shift did not give us a strong expansion, which sounds suspicious. Then price leaves us with what? With a breaker block here. Do you see it? There is a breaker block here. And also, we have another breaker block here. Do you see? And price did not take out the second breaker block. Had it been price take out the second breaker block and close below it, we would have gotten double break of structure. But we only had one break of structure, which is one market structure shift, and there is no strong displacement, but there is a fair value gap here, a very large fair value gap. Do you see it? This is a fair value gap. So what happened was, let me clear all these things so that it will be clear. So what happened was, as soon as I see this, I know that no, this can't be, I cannot be in this because anything can happen. However, like I've always said, whenever there's a market structure shift and there is no inducement, price does not give us opportunity for inducement, and also as soon as price created market structure shift, we see that the breaker block is mitigated entirely. You see? So what you need to do is to target the other block. This is the last candle, and price came into it. But for more confirmation, what I did was, when price took out this low, close below it, I had double break of structure. One is this market structure shift here again, and another break of structure. And whenever you have double break of structure, between the low of the market structure shift and double break of structure is the area of interest where you can sell. So this area became my entry. Now, because of the irregularity of the market, I placed my stop loss at this level. My stop loss at this level, that is above this high. So I'm currently selling in the market. So guys, this is how to determine your daily bias. It's very, very easy. So if you go back to the daily time frame on the GBP USD, you will see that this is what I have been saying. You see it? We have what? We have SMT, guys. So here is the fair value gap on the daily, right? So let's check on the dollar. Do you see? Price did not enter into any fair value gap. Do you see? This is the fair value gap. Price did not enter inside the fair value gap. You see, price did not enter into this fair value gap. This is an SMT divergence. So if you go to GBP, you see that price has entered into the fair value gap, and it gives us a what? An SMT divergence. So this is how to determine the what? The daily bias. And also, we've seen that price has closed below the previous candle range. So we are expecting price to continue, but yesterday we see an inside bar and then price came into the fair value gap. So we're expecting price to take out this low, and eventually this fair value gap price should balance it. So guys, this is what I have, and do have a nice day. Bye.